We are now joined by Satish Pai, Managing Director at Hindalco for an assessment of Q1. Mr. Pai, good having you. Thanks for joining in. Are you happy with the overall performance in Q1?
So first thing you have to realize is 80% is on a year-on-year basis. If you see sequentially, we have been steadily going up because our costs have been steadily coming under control as coal prices moderate and carbon prices moderate. So I think that, going forward, to be fair, the LME has come off its highs now. So we are a couple of $100 down compared to the LME of the first quarter. So I think that it's quite clear to me that Q2 profitability will be at a slightly lower level than Q1 because of the LME. Now, overall, how will the LME behave going forward is very tricky because it is very much driven by macroeconomic events, geopolitical events, not really supply and demand. So, particular incidents can spike the LME upward. And sometimes, like if poor economic data comes out, the LME goes down. So we are in for some very volatile commodity price market. I think what will hold us in good stead, which you said, is our cost. So if we can keep our costs under control, then we will be producing very good results.
Okay. When I look at the EBITDA performance, Mr. Pai, the upstream EBITDA did really well. Downstream was not able to quite live up to it. Just trying to understand, how do you see the quarters ahead?
I know, but if you take what you said, how do I see growth? How do I see market demand? All these I'm seeing very positive. For example, the can market has come back. That's why Novelis volumes went up and the EBITDA went up. If you look at Indian aluminium demand on a year-on-year basis, it's up by 15%. The copper is up by 11%, driven by electrification. So it's very clear that in the coming quarters, you're not going to have any problems from a demand point of view. I think the demand will be quite strong. And I think that from a cost point of view, we are going to do everything we can to keep our costs under control. The only thing that we cannot predict is how the LME prices of aluminium will behave, because that's, as I said, driven more by macroeconomic or geopolitical events at this stage.
Mr. Pai, I want to talk about two things now: growth over the course of the next 12 months and costs, particularly the impact of shipping costs, because a lot of companies are saying that shipping costs, because of the geopolitical tensions, have soared, and that is impacting their numbers and performances, international businesses in particular. What's your experience?
So for us, to be very honest, whereas the shipping rates going up has some impact when we export to, let's say, Europe, but overall our India business has not got any significant impact because we are selling 60% of our aluminium, 63% in fact, to be accurate, in Q1 in the domestic market. So the shipping costs have not impacted us so much. If you look at Novelis, because they do send a lot of can body sheet from Asia to the US and to Europe, that they have seen some adverse impact because the shipping rates have gone up because of the Red Sea problems.
Okay, okay. And what about demand outlook? Because a lot of notes are, I think on the con call you mentioned about how the beverage can piece looks okay. In fact, you spoke about it earlier in the interview as well. What is the demand outlook for the next 6 to 9 months?
No, I think that, the can market, just to be fair, went through an extended period of destocking. So I don't see can demand being adversely impacted unless there is some major global slowdown or something like that. The auto market, that the sale of EVs has slowed down a bit, but we supply aluminum to both ICE engines as well as EVs. So we are fairly comfortable there. The aerospace demand has gone through the roof because the backlog for planes is huge. Building and construction in the US, that on the high interest rates, that had slowed down. As the interest rates, everybody's getting clear they're going to cut. The building and construction market is coming back. So I think that what I worry most is geopolitical events, because that can, then all bets are off if something adverse happens there.
Okay, but interesting you speak about aerospace demand because we were talking to some companies who are suppliers to Airbus, Boeing and the likes, and they were saying that those companies have brought down their supply estimates for the year. Are you sensing the lack of the pace of demand from aerospace companies?
We are not sensing that because the aluminum sheet and demand from the aerospace side for us is quite strong. No, we are not sensing that, honestly.
Fair call. I have one final question, Mr. Pai, and that's expansion plans because you have expansion both on upstream as well as downstream, forward as well as back integration. Talk to us a bit about this. When do some of these come on stream?
So I think that, for the first time now, we have started to say that our downstream investment cycle is reaching that stage where we will now harvest what we have done in the downstream. And going forward, the new capex is going to go more into upstream. So we are going to focus on the alumina refinery. We are talking about a new copper smelter. We're talking about a brownfield expansion of the aluminum smelter. So I think over the next coming years, you're going to see capex going more towards upstream while we harvest our investments in the last 3 to 4 years on the downstream.
Okay. Okay, Mr. Pai, we'll leave it at that. Thanks so much for taking the time out and being with us, giving us these insights. All the best for the quarters ahead.